into it. It's an appetizer.
Okay, we have Katheryn Tuberty here talking to us about 10, I'm looking at it, that's a 6.
I know,
Cindy
said 10, I only have 6.
Well, maybe as a round table we can come up with a few more. 6 reasons why your family doesn't need life insurance.
Thank you very much, Leslie. And Cindy did invite me, and a couple of months ago, so I'm very pleased and honored to be able to talk to you guys today about life insurance. Because you know what, I hate life insurance. It's a pain to sell. It's hard. Nobody wants it. Although, you know, everybody probably does need it. It's, you know, all you have to have a physical and, you know, all the paperwork. It's a very pesky process to have to go through. So, it's just, life insurance, you know, is kind of a pain. But when you think about, I'll pass these around. I'm going to take a couple that way. And you can review some of the reasons. And like I said, I don't know where Cindy got 10 because actually I have 6 reasons why your family doesn't need life insurance. And the first reason, of course, is that you're never going to die. You're going to inherit a fortune. The third one, you're going to win a lottery, and a lot of people were counting on that a couple of weeks ago.
I had my island all picked out.
We all went out and bought our lottery tickets. And of course, a lot of people say, well, yeah, someday I'm going to win the lottery, but they don't actually buy tickets, so that's kind of a problem there too. Number 4, your family will be fine without you. Number 5, you're never going to retire. And number 6, which could be true for a lot of us in this economy. And number 6, that the government is going to take care of our
Which government? This one, or are we moving somewhere?
The GNA government coming soon.
Going to Switzerland or something, yeah.
With those reasons in mind, of course, it does make sense to actually have life insurance. But like I said, it's not, you know, I do sell all insurances. I sell home, auto, commercial, workers' comp, health. And the life insurance is actually probably the most important insurance policy that you should own and that you should purchase, and it's on the bottom of your priority list. And a lot of it, because of some of these reasons, people don't think about it, they don't think about what's going to happen after they're gone, they don't want to think about that kind of thing. And the life insurance probably is the most important insurance policy that you can purchase. So I put together some just some general information, because there are 2 different types of life insurance policies. There's a whole life policy, which is also known as a permanent policy, and then there's a term policy. A term policy is for a specific term of time. So if you buy a 10-year term policy, it will start today and it will end in 10 years. Or you can buy a 20-year or a 30-year term policy. So you buy it today and you pay every month you pay, and at the end of the 10 years, then it's done. Like your car insurance. You buy a 12-month car insurance policy, you pay your insurance premiums every month, and the end of 12 months, then it's done and you renew it and you pay for another 12 months. So with your term life insurance policies, it's the same type of thing. You don't get money back. There's no investment of any kind in a term life insurance policy. But it is protection in case something happens to you during that 10 years or that 20 years. If something happens, then your family or your beneficiaries are going to get whatever the face amount of that policy was. The whole life policies or permanent policies will start today and they don't end. They last for your whole life, or they are permanent for your life. As long as you pay the premiums, don't cancel them, those policies are never going to end until you die. and then your beneficiary will get the face amount of that policy. So those are the two different types of life insurance policies, generally two different types. And of course everybody wants to know what the best life insurance policy is to have. What's the best policy I can have? Well, bottom line, the best policy for you to have is the one that's in effect if something happens to you. So if that's going to be a term policy, if that's going to be a whole life policy, whatever, it's going to be whatever's in effect, just so you have something. A whole life policy has some distinct benefits. It's got an accumulation account. Part of your premium goes into a savings account. The insurance company pays interest on that. After a few years, you can use that money. You can pull it out. You can, depending on how big your policy is, it can build it. You know, you might be able to put a down payment on a car, or maybe if you start younger, even a down payment on a house later on. So there are some distinct advantages to a whole life policy. The issue is the whole life policies are expensive. A term policy, in fact, I've got an example here. I have a 35-year-old, very healthy male, and a 10-year term policy for him is going to be $14.77 a month for $250,000. Who can afford that? $15 a month, yes. It's going to end in 10 years. But at least for that 10-year period, he's got that policy. If we bump that out to 20 years, then he's paying $25.39, so a little over $25 a month. That's still not a bad deal for a $250,000 policy. But again, in 20 years, it's going to be gone. I can get him a $250,000 whole life policy, so that starts today, pays until he dies, and a $250,000 death benefit. That premium is $201.25. And one of the reasons for the distinct differences in the premiums is with these term policies, the 10-year, the 20-year, the 30-year term, the insurance company is gambling that you're going to outlive that term and that they're not going to have to pay anything out, right? I mean, that's what it is. The whole life policy, they know they're paying somebody at some time. So the premiums are going to be a little higher. But again, the premium, or the whole life policy does have the accumulation account. So if Joe Blow were to buy this policy today, and he died when he was 70, it would be, his beneficiaries would actually get $325,000, a little over $325,000. So that adds to the death benefit, or you take it out. You can take loans against an accumulation account. It does affect the death benefit. So the best life insurance policy to have in effect, of course, is, or the best life insurance policy is the one that's in effect when something happens to you. And what I like to do, especially with young people who are buying their first home, they're starting to have children, so they've got little kids that they're looking at raising, is doing a combination of both. Maybe get a $150,000 whole life policy, and maybe a $300,000 20-year term. 20 years gets the kids through college, kind of stable, then that policy quits, but at least by then, and then he still has his $150,000 whole life policy. But at least that first 20 years, he can rest assured that his family's going to be taken care of, his kids are going to have college tuition, the wife is going to be able to pay off a house, and that they'll be taken care of financially. So there's always that option to do the combination of a term and a whole life, depending on what your life situation is. And a lot of times when I talk to people and they say, oh yeah, I've got life insurance at work. That's awesome. And a lot of it, especially bigger companies, will provide that as part of a benefit. Health insurance and life insurance. But I've yet to talk to any of my clients who know how big their policy is, exactly what the policy is that they have, their life insurance policy. How much is it? Is it $50,000? Some of them are, 3 years of your annual salary. Some are 10 years. Some are a flat amount. Some of them are, maybe a $200,000 policy. But like I said, I haven't met any of my clients who know actually what their life insurance policy is.
How much to use it with you?
I mean, because it's there, and it's a benefit, and I know it's there, and it's fine, but,
When I signed up with the phone company, it would tell you this is how much you would get that we cover, but you can pay the 2X or go up to 500 or whatever you pay a monthly to.
And add to that benefit.
Yeah, add to that benefit.
Which is excellent. Now, and those are great policies and a tremendous benefit for the employer to provide to their employee. The problem is, when you leave that company, you don't get to take that policy with you.
Nope.
And the other issue is, this policy for Joe Blow at age 35, if he doesn't buy this now, when he turns 36 next year, it's going to be a little more expensive. So each year, it costs more to start the policy, to start a life insurance policy. But once you have a policy, and so he buys these today, those premiums won't change. So your life insurance policies the premiums are based on your health and your age. So that's the other thing. If Joe finds out, he decides to put this off for a year, and now this next year he's gotten high cholesterol or high blood pressure. Well, now his premium is not going to be $14.77 a month. It's going to be, because he's going to be rated for that health issue. Once the life insurance policy is in effect, you do get sick, you get cancer, whatever, it's not going to affect your premiums once the policy is in effect. The other thing that comes up with my clients who have policies at work, in fact, a gentleman had gotten married, wife had a baby, and I met with him about all of their insurance needs and talked about life insurance. And he says, no, I've got a $250,000 life insurance policy through my union. Really? That's great, awesome, doesn't have to pay anything for it, that's a great deal. Could I take a look at it? It was a $250,000 AD&D policy, which is an accidental death and dismemberment policy, which means, and of course she didn't understand that, the only way that would pay off is if he died of an accident, and then there would be some pay if he lost an arm or limb or something like that. But if he gets cancer or a heart attack, they're not going to pay out. So, yeah.
I just wanted to ask a question about I know there's a policy where you can get, and it can work as your life insurance policy, or it can work as your, let's say that you do get cancer or you do get chronically ill, you could pull some of that money out, or they'll pay you a certain percentage.
Yes, there are ways that on an older policy, and it would be a whole life policy that has some cash value to it, that you can pull that money out up to a certain amount. There are also riders that you can add on to policies. Farmers has what they call a critical illness rider. It would bump the monthly premium up a little bit, but that's exactly what it would do. You do develop a critical illness, it's going to pay your premium on your life insurance policy, plus pay you a monthly predetermined amount. That's a very nice benefit as well.
So what do you say to people who start out, day one of their life with a chronic illness or a condition or something that, would probably cause them to be denied for any kind of life insurance?
Well, generally children's life insurance products are a little more flexible on coverage than an adult. But you're right, there are clients. In fact, I had a woman that came into my office. She was in her early 30s, and she had had a massive stroke. And I think it was her left side was pretty much immobile. She had 2 little girls, and she bought life insurance policies for them because she didn't want them to ever be in her situation, because there's nobody that's in her life. And sometimes if you have illnesses, if you have a heart attack and and say after 5 years you haven't had any more issues with your heart attack, you'll be able to get a life insurance policy. It's going to be rated for that. So your premiums are going to be a lot more expensive than if you had gotten a policy before any illness.
Can I add something to that though?
Yeah.
But some disabilities, if you're born with them, they will cover you. I was born with scoliosis. I have a metal rider on my spine. I've been covered when I had a
Right, and actually I have a client who has multiple sclerosis, and he wasn't even rated, he got the premier rating.
Right. It's
Because
because I was born with it and I got it corrected.
And it's not necessarily life-threatening. What they're looking
Exactly.
at is issues with, the organs, lungs, heart, liver.
So for things like that, there are no companies out there that would just pay an incredibly high premium for. There's just policies for you.
Well, no, because then you get into the cost of the premium versus the value of the product, and there's laws against that.
So people that say, oh, there's something.
Well, let's say this, if they were car insurance, right? You may have to invest in a condo or rental property or something as opposed to, like right now with me, I don't think I could get anything. At least forever, tell me 5 years survival rate.
5 years survival rate, but you'll be rated. I'm sorry.
Oh, no,
You'll be able to
I
get the premium or the preferred rating. That'll always be available.
Yeah.
Blackmore on the records. So that's the advantage of, getting life insurance when you're young and healthy, cheapest, and that's when it makes the least sense to people, cognitively.
You want to live forever when you're young.
And if something does happen, the government's take care of my family, so.
Well, that's when you're younger, you think you're gonna live forever, and then your money's tight. You're not at the point, you either just got out of college or whatever, I'm only making a little over minimum wage, how can I take on another bill? And so, one time is when you're young.
Even for Joe, if you were to get that 10-year, assuming he's married and maybe has a small child, $250,000 policy, even for 10 years, it's $15 a month, that's less than a pizza, So.
You can't even fill up the car for $15. I don't even
3 gallons of gas?
Exactly.
And I got a small tank.
So, that's my presentation. Do you have any questions?
There's a comment I want to make.
Yes.
People don't realize that you have a certain threshold or a window of income earning. And may take advantage of it, is as you get to the end of that, your income earning situation is over. Not over, it's radical. Okay. So I think that would be something you stress to younger people. Keep that in mind. Now with a lot of changes in business, the business was so you have something to an income stream, probably something early, make it affordable.
Absolutely.
Because a lot of companies aren't even offering it now.
Oh, yeah.
They took it out. If you have a regular day job.
Yeah.
They can talk about stock options all the time. It's better to see it.
I'm taking a vitamin that fits me with the number one.
Okay.
I'm never going to die.
Okay.
Question,
Yeah.
my family are still back home in the Philippines. I got married over there. So if I have a new insurance, something happens to me, they still cover it as my family, even if they're back home, or they need to be like.
The beneficiary, whoever you name as a beneficiary, will get
I
it.
will find out. Okay. Thanks.
So they don't have to have a social security or anything to check?
They
They
have,
prove it's them.
right, we go by, on the beneficiary information that we collect is the name and the birth date and a social security number if there is one. Although it's not such a big issue now, but a lot of times parents will leave their kids, or name their kids as beneficiaries, and sometimes the kids are small, they don't have social securities, although.
No, they force you
anymore, now
within
they're
6
getting
months or
as soon as
something.
they're
you have to
born.
get-
Yeah, you have to have one, but,
I
yeah.
like number 5. And actually, number 5 is almost true nowadays for us, generation.
I know, yeah.
Young
Well,
40s.
Elias favors number 6.
The government, yeah, the
Think
government.
of it.
I have a comment now. I'm an insurance broker myself also as well, but I have a life and health license, but I'm not using it right now. I'm looking to refer that to somebody, maybe we can talk about that at some point. But are you also doing, the PNC side, are you doing any commercial insurance?
Oh,
like
yes,
that?
yes.
Because I know Farmers does really well with small business owner policies, and that's something as a broker that it's better to refer it off to them. So you're doing the PNC side and the life and health side as well too?
Yeah, home,
Okay.
auto, commercial, workers' comp. We have some good workers' comp policies right now. And also health insurance as well.
Perfect, because I'm all over Northern California. I'm working with some other farmers in the Bay Area, where it's nice to target market. Are you looking at target market like your, this area, Solana County area?
Yeah.
Or primarily,
Yeah.
pretty much?
And primarily because this is my home base and most of my connections, I'm very active in the chamber and Rotary Club and that kind of thing, so.
Cool. Okay.
Yeah.
Now I know where to send the commercial business and the life and health business here. Great.
Yeah,
Perfect.
thank you.
Yeah.
Comment.
Yeah.
I've talked to several life insurance agents. I like their style.
Yeah, me too. Me too.
Yeah.
I think it makes me want to listen to you more. I speak with several life insurance agents. It makes my head shut.
It's, yeah.
I want to ask questions and stuff. Yeah, I just want to let you know.
You know what it is? I started off with Farmers years ago, and after a year I left, not because it was a good product, but because I had a district manager that'll say, excuse me. You gotta sell life insurance, you gotta sell life insurance. I would sell it to PNC, and life is harder to sell, and the economy was already starting to kind of fizzle even several years ago. So, that's why I kind of took off there, but this is very, very refreshing to me too, being in the business, to hear somebody say that way. Very honest.
Reverse psychology or
Reverse psychology. Oh yeah, that's right. Yeah.
We're gonna die. Come on, I'm gonna die. I'm not right now, but yeah. Inheritance.
Yeah. That's very good.
Very good.
So what about long-term insurance? Are you rated as to how likely you would be to have long-term?
Long-term care insurance? Yeah, long-term care insurance is, it's a very unique product. There's a very specific population that would benefit from it at a specific time. If you're too young, it doesn't behoove you to start paying those premiums because you're not likely to ever, receive the financial benefit on the other end. Although if you wait too long, then it's too expensive to get into it. So there's a very finite window. Do you sell long-term care insurance?
I used to. It can get pretty costly. The timing has to be right on. like you said.
And
Yeah.
you have to fit within a specific income bracket. Because if you're below that bracket, well, you're going to be, you'll get into Medi-Cal or whatever. And if you're above that income bracket, you should self-insure yourself. So it's very, and
Long-term life insurance.
Oh,
long-term care insurance.
long-term care. Long-term care.
Oh,
Yeah.
long-term care insurance for nursing homes or.
And see, like, if you were in the union really
But some of where
takes
they
care of
say,
that. And don't realize that.
so
The
you don't need to die.
union they have policies
Enjoy
like
your life.
places. But most people don't know that for any.
And you know what I found out, by the way? When you buy the insurance through your large corporations, they also buy insurance on you. So when you kick, your family gets some, and then they get some.
Oh, reinsurance, that's
Yes.
a lot of companies do that. Oh, yeah.
So they're making money on the bottom line when you kick
Well, it's a business, but you know what? Like what Eric is doing, taking care of his grandpa. His grandpa's like 86 or something like that. More people are now staying home and taking on, and I'm not gonna say burden because it's family, but let's face it, it's a burden. We love our family, but it's a lot of work, and long-term care, we definitely take care of that, but the cost, if you don't do it at the right time, like you're saying, that's why I'm not selling Life and Health right now, is because it's very, very tough market. It's product that's needed, but people look at it as a luxury, that's something that they
And
actually.
the health insurance, I get emails every day about changes, because I work with 2 different groups. Well, we're gonna drop this coverage, we're gonna increase this, we're gonna lower this, it's impossible to keep up with all the health insurance changes right now.
Oh, God.
How do you find out when a company has insurance on you? Like your company?
Yeah.
How do you find out? Like you work for a company, if they
You
have.
can ask the HR department.
It's usually as part of your package, and then when you re-up every year, you have to figure out whether you're going with Kaiser or DHMO or whatever.
Oh, the open enrollment.
Yeah, open enrollment, all that stuff is listed out as your options.
So we look for the term reinsurance, is that what?
No, reinsurance.
You're not gonna see that out there.
Ever heard of Lloyd's?
Yeah, reinsurance, someone else to protect the policy that we sold you.
That's what I'm saying, how do you find that reinsurance out? You have to ask for these, sir?
I
It's like
check
one of
with
those
the HR
things you
department.
And then you're gonna be
There's
taxed.
nothing you can do about it, they're gonna just pay your premium.
It's on the insurance exam, but it's not publicly stated, that this, you read all these fancy reports, but they don't want you on that. I mean, come on.
Back to the long-term care insurance, I don't
I mean,
sell
I'd love to
long-term
know,
care
but
insurance,
that's how you find
and
out.
it's really more of an investment product than it is a true insurance type
That's
product.
what
I just want to share something.
That's awesome,
My
thinking of
family
insurance,
is
you know.
at that point where my mom just can't do home care because she's 96 going on 97, so she should have done it a long time ago. But there's something that you need to know, that when they do go to Medicare, and if there's still any assets available, or bring down the assets,
Yeah.
they don't go out of the house. But
There's ways to get around that.
there's ways to get around, yes.
You put the money in someone else's name, the house in someone else's name, the family member, who's ever in charge of the estate.
But it has to be done 2 years before any type of
Then you do it right away, as
So,
soon as that person gets ill.
there are-
There's also veterans benefits that are
It's
available.
not there, but,
Well, was your dad?
no. But about 2 or 3 years ago, we went to an open public meeting with an attorney in Kansas named Roy Litherland, and Scott saved crackers, since my mom's going through all our assets, and actually the house will be okay. We do a lot of great things. We live that long, so. But there's only a handful of people in California that know that aspect of the law. So if you want, is it Nate, come see me. It's Penny or something. Anyway, so, but be mindful of that if you're in that situation. So, there is hope.
And a note on the long term, if you have a family member taking care of your elders, they can take that money out of the estate to pay the family member, and they can deduct it from their taxes and everything. And sometimes, depends on the pension or the union, if they were in a union, they will give you money towards that. I know, because I did it for my grandma. They were to pay me a monthly salary out of the estate, and then they got part of it reimbursed, and actually it was a tax deduction as well.
Interesting.
Look at what we learned today.
It's awesome.
Fairfield for information.
So what would you suggest? I mean, Karen brought up the subject about people that are predisposed with conditions, as far as, there's really, what would an option be for family members of somebody with a predisposed condition that would knock them out of running for insurance?
Try investments.
Money market account, because then you have access to the money now, not later. There's paying less, but if you need that money, you can go withdraw it.
And again, like I said, it depends on the conditions. They're really looking at like organ issues. And so, it'll depend.
So, I mean, really, there's, what I was wondering is there's not a group
the employers. Right, so.
But you need
so
to be
you-
aware and read that fine print, right? So-
No, if your employer has a life insurance policy for you, then that is part of the group. And they would have that policy and that coverage, as long as they're with that employer. But then again, once you leave or retire or whatever, then the policy's no longer in effect.
So that is the best case scenario, actually, if you have a predisposed condition, is that they pick up everybody usually for something.
So
It's the problem is with an independent.
Yeah.
Well, I don't know if that would still run through if you had your own corporation or something. We would have to get somebody in here to talk about that as far as LLCs, corporations. Your corporation can purchase insurance. Isn't that an option?
Get group policies.
Yeah.
I know that with the health insurance policies that I sell, there's a life insurance component to that through Anthem and through Cigna. Both groups have a life insurance component. Their group policies are not real big. I think they're like $10,000 or $15,000.
Yeah, they're low risk.
You know, that's,
Yeah.
Yeah,
But I mean,
they're low
I'm just
risk.
thinking about, just different options. I mean, if you start your own corporation, and 1 or 2 employees, husband, wife, or something like that, then possibly you could do something like that. Or if the company that you're working with, even if you're an independent contractor, some companies do have that option.
Like that, like for life insurance or?
Yeah, for insurance.
But
or
then,
health.
then what I would assume is like what Katheryn's saying is that the premium or the face amount would be so low that it would be a very minimal risk to the insurance carrier. So they have a master policy and they gamble that all the employees are going to be alive throughout whatever, however long they're employed with that company, right? Yeah. And they usually, the insurance company will usually win. I'm an insurance agent, but I'll say that. The insurance company, it's a business. I mean, it's a business. You're leveraging the risk between yourself and the insurance carriers out there. That's what it is. And you have to just leverage it as best as possible. That's why you have insurance agents. That can educate you on what you think you know, but you really don't. I'm sorry, I'm not as good. Well, I'm not talking about you, I'm talking about everybody else. Okay, I'm done.
Well, I know Katheryn's been able to beat some other policies with health insurance. I remember hearing that on prices and stuff like that. So I got mine through retirement, and I'm lucky, but that's the only thing I was able to take with me.
yeah.
Was my retiree health insurance. So I'm glad I had that.
The other stuff you have to leave behind when you left, huh?
Huh?
All the other stuff you have to leave behind once you left.
Yeah, they don't offer it to you. But since I'm a retiree, I get to do the medical.
That's great news.
I know. And then my kids are like, well, I need new glasses. Why don't you have vision? I'm like, you need to go buy you some glasses. You got a job, go buy you some glasses. There are too many places, Cypress Eye, Pearl, whatever, go down there to Walmart, wherever, just go buy it. Yeah.
Okay, so I have a couple of things. First of all, I brought pins for everybody.
Cool.
And also cards. I'm gonna use this. And then if everybody would like to put their card in this little bag, and I will drop a name for a card kit, a little accident kit. It's got a flashlight and a camera and a whistle.
I'm like, where are my
All I have is my gift cards. Or this.
vote for Debbie? Well, I think she would be able to find you with that value dog training card.
Value dog creating cards.
There we go.
That's unfair there, Sal.
Yeah, use the back of here, there's the.
Sal's gonna have the advantage of that big postcard size,
I think we planned this.
Exactly.
Well, yeah, look, hello.
So are you gonna be,
I'll talk to my family, send it photo.
I will.
do all that dollars?
Doggy insurance.
Love it. Next-
Doggy insurance is a waste of, don't say I said that. Insurance is-
I'm sure Elias doesn't
Oh,
sell
it is?
doggy insurance.
don't worry, I'm not gonna edit this video.
Wow. Because do you know what you have to spend for it to really kick in?
For the medical
Yeah.
insurance? No.
You have a $1,200 deductible. Are you gonna spend $1,200 at the vet every year?
Wow.
H, no.
Sherry and Debbie and.
Awesome.
Oh, yeah.
Thank you very much.
Love it. Have the photo there.
Give Katheryn a big round of applause. That was awesome.